What is up, you guys? Pete DiCarlo here, and today we're going to talk about this kind of small cap tech crash slash bubble that we've been seeing happening in the past couple of months. I didn't really plan to make this video today. I actually had plans on, other videos based around trading, but I wanted to put this video out because I feel that there are a lot of people whose portfolios are getting absolutely hammered over the past week due to these small cap companies kind of taking a massive haircut and taking a massive beating over the past couple of months. So because of that, I want to make this video to kind of help you guys out, give you an understanding of why a bubble happens, what happens during a bubble, and kind of what you can expect overall for these small cap growth companies as well. Because of so many people unfortunately losing money in the past couple of months, I am offering my private academy 100% for free for the first month. 90% of people truly fail trading in the stock market, and it doesn't have to be that way. It really doesn't. The video I was actually going to make today was talking about how if you do XYZ, what I was going to explain in the video, you basically have a 50-50 chance of becoming a full-time trader. The whole 90% rule, it is true, but that's because 90% of people don't do what needs to be done in order to do what the 10% do for a living. So I am offering my private academy 100% for free for the first month to anybody who wants to join. Last time we had like 296 people join in 48 hours. That was during the GameStop craze, but I don't know how long I'm going to have this code out. So use the code free trial, use the link down below. You get access to every trade I take live, access to our 60-hour course library, access to our private Discord, as well as you get to hang out with me every single day and trade. So guys, thank you for all the support. Hit the like button, subscribe, and let's get started. So overall, one of the first things you will see is that even though the market took a massive beating in the past couple of months, the NASDAQ today is actually hitting all-time highs. The S&P 500 has been hitting all-time highs day after day. The Dow has been hitting all-time highs day after day. Yet a lot of these small cap growth tech companies that a lot of people love to play who are new retail investors, things like Plug, things like Blink, things like NNDM, things like BNGO, all these companies are getting hammered. And something that you have to think, and the first point that I want to put out there is that everything is relative. The first thing you have to realize when you're going to invest in a company like this, or you're going to trade a company like this, is that just because something is down doesn't mean that it has to go up. And I know that that sounds very rudimental and very basic, but some people don't understand that. Some people will look at a company such as Workhorse and say to themselves, oh, the company was doing so well, they were up 1,600% in a year, which number one is just not sustainable. And now they're down, in the past 90 days, 71%. Well, the first thing is, if you're going to trade a company, you have to understand why that company is down. Is it just because the entire sector is down? Is it because the entire market is down? Or is it because there's massive news that fundamentally impacts the company, such as Workhorse? They missed a massive, massive deal with USPS that a ton of people actually had them quote unquote priced in to make. So even if they got that deal with USPS, which this isn't going to be a Workhorse video, even if they got that deal with the United States Postal Service, I don't think that the stock would have ripped because it was already priced in. And so you guys have to first learn, why is a company fading, right? Why is a company getting the crap beat out of it? And like I said, in the case of Workhorse, it's because there's a fundamental reason behind it. However, maybe in the case of Plug, BNGO, Nano Dimensions, which is another one, NNDM, it's just the entire sector is getting killed, or all small caps in general is getting killed. So the second thing is going to be because of sector rotations. I'm going to make a video in the future talking about sector rotations, but one of the main things that I tell my team all the time is that big money, aka Wall Street, aka billionaires, aka hedge fund managers, their money never sleeps. These people rarely ever have cash because they're either rotating sectors, or they're putting it into the bond market, or they're putting it in crypto, or they're selling options. The money never stops, because to these hedge funds and to these big money, whales, these people realize that money sitting is money that's dying. So they constantly have their money going. And so if you look at certain things, like if you guys remember back at the end of last year, maybe third quarter of last year, we had EV market ripping. This is when Tesla moved, from, November 16th to January of this year, 121% in just 3 months, right? We had electric vehicle companies ripping. We had Tesla moving heavy. We had NIO moving heavy. We had things like Plug moving heavy, things like Blink moving heavy. That was a sector rotation. Big money saw that EVs and tech was extremely undervalued, and they were leaving things like banking. You look at Citibank back at the time, you look at things like travel at the time were kind of taking a bit of a hit. Back here you see travel was not doing too well, Carnival wasn't doing too well, NCLH wasn't doing too well. So like I said, they're rotating sectors. Now, after tech kind of fell off and we saw Tesla have this big fall off in the past couple of months, we had things like Apple fall off in the past couple of months, starting to recover really well. We had things like Microsoft at the time that was falling off a bit. We saw more things like banks. They started rotating money into banks. So like I said, we saw tech starting to fall off around February of this year, just 2 months ago. We had banks like Citibank rip nearly 30% in 35 days. You have things like Wells Fargo that was ripping, during that time, 30% in 50 days. You have things like travel, because now they rotate their money to travel. So you look back in February, you have things like American Airlines, it's up 32%. So they're constantly rotating money. And this is extremely important because what you want to do as a trader, we're not talking about as a long-term investor here, but as a trader, you want to keep an eye on big money and learn where are they rotating so that you can kind of follow along with what they're doing. And if you look at small caps at this time, like let's look at from here. So if you look at most of these companies that you guys like from September to January, so basically the last quarter of 2020, these companies were up massive. You have things like Plug that was up 700%. You have things like BNGO that were up thousands of percents. Gevo up thousands of percents. Blink up thousands of percents. NIO up thousands of percents. Now big money is leaving them. And a lot of this is because of sector rotations, but it's also the third reason that we're going to talk about, and that's because of a bubble. Now, I talk a lot to you guys about market cycles, and it's one of those things like, I know I harp about the same thing over and over, but it's because it's extremely, extremely important. Some of the most, things that some of the most fundamental and rudimental things that there are out there, especially when it comes to trading, people think to themselves, why is he still talking about this? Why is he always talking about this? Because it's extremely important. And so what I want to show you right now is a graph of a market cycle. There are a bunch of different ones, but I want to show you first in big form how these kind of bubbles and market cycles happen. And then I also want to explain to you guys, kind of show you a couple of examples here. Now, all market cycles don't happen at the same time. We could have a market cycle that could happen in an hourly time frame, and we could have a market cycle that could happen over a 10-year time frame. Like if you look at something like the tech crash, the dot-com bubble in 2000, or you look at 2008. But let's just look at the past year at a lot of these companies like NIO, NNDM, all these different types of companies. And this is a really good example. So within this first phase here, this exact example has kind of broken it up into 5 different sections. I really break it down into 4 different sections. But the first one is called the discovery phase, or in my opinion, I call this smart money. So the discovery phase is really a time where people who are really, really interested in this company do their due diligence. They think that this is an extremely undervalued company, and they find the company. They understand the executive team. They understand everything about this company, and this is when they enter it. So for me and my buddy Oz, I've been trading and investing with this guy for so long. We found Moderna, and this is well before the Roni. And this is back when I would consider this is a 3-year chart, but the discovery phase. So we were buying Moderna heavy at $11. The thought of Rona or everything that's happened in the past year was non-existent. We just found a company that had a great executive team. We found a company who we thought was on the cutting edge of a lot of different, vaccines, a lot of different, really just the medical field in general. They were the cutting edge of everything. And we truly believed in this company. And the biggest thing too was it was worth the risk. I never expected that within a year the stock would be trading $190, but this was during the discovery phase. And I can also use Moderna as an example too coming up. Now, after the discovery phase happens, you start to see some trends emerge. You start to see that other people are discovering this company, other people are looking into this company, and then we start to get into what's called the momentum phase. The momentum phase is when the stock starts to push up, and then we start to see a couple of shakeouts. So people like myself who got into Moderna at $11, they start to get out because I'm up, 100% return on my investment. Why would I knock it out? And if we look at something, in Moderna, I'll show you specifically, it was right at this time. On this pullback, Moderna hit $90, and then on the pullback, I sold Moderna at $74. Now, many of you might say, oh, you're an idiot, you sold at $74. Well, here, number one, what I want to throw out there is the fact that, like, I didn't know it was going to go up to 190. At this point, I had 7x my money. Why the hell would I not walk away, or at least take some profits off the table? So at this point, in the momentum stage, you can see right here, we have a shakeout. Like I said, this happens when, the original investors start to take some profits off the table. They start leaving, but we can sell. To me, if you really are in this discovery phase, it's not a weak hand, it's just proper risk, in my opinion. Then we start to see more momentum build. This could be because, a company like Tesla or a company like NIO, it's a hot sector, or it could be like Moderna because the Roni happened and they were able to step up and, provide a vaccination, and all this like big momentum got behind it and it became public. Then we have a bear trap, and a bear trap happens basically when a stock is ripping, it has a massive pullback, and what happens is everybody who, they saw the massive profits they had, and after that pullback, they're like, okay, I need to like watch myself, and I need to take some profits off the table. So that right there would have been kind of here when Moderna hit 170 and dumped back down to $100. That was a 37% move down in just 3 weeks, which is pretty crazy. So that would be a bear trap. Now, what happens with a bear trap is when the pullback happens, and I'll show you guys other examples, but when this pullback happens, you get a lot of people who didn't enter down here start to load up. And then from there, we move into the third phase, which is the blow off. And the blow off is essentially when the public gets a hold of something and just pumps it. It gets pushed through different Facebook communities. It gets pushed through, Reddit threads or Wall Street bets. CNBC's blasting it all over the place. And this is when it starts to hit, FOMO. This is when it hits euphoria. This is different. This is not like everything else. Of course, the stock's going to hold up here. Then it dumps and we get what's called a bear trap. And a bear trap is the exact opposite of a bull trap. And so what happens with a bear trap, like I'll show you, for instance, something with NIO. Let's go to a daily chart. This right here would be your bear trap on NIO, where the stock dumps from 67 down to 55, and then we get this bounce. And everybody who missed out on the opportunity to buy, down here, they all start to get in, and they try to get in. Here, let me show you. They all tried to buy in here. They missed out. Then the stock up here dumps. They try to get in. And what happens is it traps a ton of people. And then the stock absolutely crashes. Capitulation happens. The breakdown happens. Fear and capitulation, which just basically means like despair. The stock tries to bounce, starts to bottom, and then it slowly gets back to where it should have been originally. Right now, if you look at this market cycle, it's not that the stock has to always come back down to where it was originally trading. It just has to come back down to normal levels. So now that you have this, I will make this actually a little bit smaller so you guys can still see it. And I want to go through some examples. Like I said before, understanding your market cycle is also going to mean that you need to understand why is a sector dying. Like I said, is it because the sector is getting hit? Like, is the entire sector, like these small cap growth tech companies, like the NNDMs, like all these different companies, is that entire sector getting killed? Or is it because of news? All these different types of things affect it. So let's just look here, for instance, at NNDM, and you can see the same type of thing. I would consider this area the discovery phase. This is when people who understood nano dimensions, they were original investors, they felt that, this was a great long-term investment and they decided to have risk. This would be the discovery phase. Now, once we have this big push up, this would be during the public phase. And this would be my first kind of bull trap, where we had this big push up, the bull trap happens. You can see that at the bottom left side of your screen. If you're looking at, your examples, this would be your bull trap. And then from here, if we zoom out, this section would be where things start to get public. And then from here on is where insanity and euphoria happens. The stock, at this point, it's up 1,400, 1,500%. the stock takes a massive dip, dumps in 21 days 63%. This right here would be your bull trap right here. Everyone tries to load up back in. They think it's going to push back up to all-time highs. There's people who bought all the way up here at 17, and they think they'll, like, I need to average down, the stock dumps, and then it never bounces back up to its highs, and then we start to slowly fall our way back down here. And you can see kind of the same exact trend happen with everything. Plug, same exact trend. I can spot right here. Here's your shakeout. Here's your bull trap right here. Here is your bear trap right here. You can see the same type of situation. Let's look at something like Blink. Same type of situation. Shakeout, bull trap, bear trap. Same type of thing, guys. It happens across the board with nearly everything. Now, I want to talk about one last thing, and we'll look at NNDM here, and that is understanding how, you guys probably understand this already, but really getting an understanding of how stocks move and how prices work. Because if you were buying NNDM at $17, $18, right, you really have to think to yourself, why? Are you just FOMOing or why? The way that the price of a stock moves, right, and most of you probably understand this, but, or I should say most of you probably know this, but do you understand it? Understanding and knowing are two different things. Now, let's say NNDM is trading at $12 right here. In order for the stock to go up, there have to be more people buying than there are selling. So this means that if I own NNDM at 12 and someone offers 13 and I don't sell, well, then they have to offer more. So they offer, $13.50. Okay, now I'll sell. All right. So essentially it's this constant scale that is happening, like the, if you ever seen the law scales on, like, some lawyers have like those balancing scales, or like the old ancient scales they used to like do rice, and weigh rice and weigh grain and things on. It's kind of like that, where you always have to have more buyers than sellers. There has to be demand. Now, something I would say to you is that if you were buying NNDM, and it's cool if you were, but if you were buying NNDM up here at 17, $18, would you have paid 19 or 20? If you say to yourself, no, then why would somebody else? When the stock is all the way up here, do you realize the amount of buying that has to happen in order for this to continue to rip? You always have to use proper risk. If a stock is up 2,600% in 96 days, why would it continue to move up? Right? Like, and that's the thing that we kind of like led to earlier. Like, yes, NNDM and these companies are down 60% in the past couple of months. But even in the past 200 days, NNDM is still up 500%, which is nuts. To get a 30% move in a year is huge. To get a 100% return in a year is like a unicorn. To get a 500% return a year is absolute insanity. And even cutting 70% off of its market cap, it's still up 500%. So overall, do I think small cap tech will bounce? I think we're getting at attractive prices. But at the end of the day, guys, don't ever get sucked up into FOMO. Don't ever get sucked up into needing to buy something because other people are buying something. Really always think with a logical mind why you're buying something and if it seems to be a good idea. Guys, I hope this video helps. Thank you. I know it's a longer one. I didn't really plan to do it, but I do think that it's something that can definitely help you guys out. Hit the like button, subscribe to this channel, and I'll see you later. Peace.